Ladies and gentlemen, good day and welcome to Aditya Birla Sun Life Asset Management Company Limited Q2 and H1 FY26 earnings conference call hosted by Rick Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Richa Singh from Rick Capital. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. I welcome you all to Aditya Birla Sun Life Asset Management Company Limited for their Q2 and H1 FY26 earnings conference call. Along with us, from the management, we have Mr. A. Balasubramaniam, MD and CEO, Mr. Pradeep Sharma, CFO. We are thankful to the management for allowing us this opportunity. I would now like to hand over the call to Mr. Balasubramaniam for his opening remarks. Thank you, and over to you, sir.
Yeah. Thank you, Richa. And let me begin extending my Diwali greetings and prosperous New Year to everyone. And good evening to everyone, and thank you for joining us the call today. I am sure all of you would have had a chance to review our earnings presentation, which is accessible on both the stock exchanges and on our company website. Let me begin with a quick commentary on the economic outlook and update on the mutual fund industry. The global economy, as we all know, continues to show resilience despite trade tensions and policy uncertainties. And global growth remains stable at around 3%, with the trade expanding significantly in the first half of 2025. However, tariff-related volatility has prompted countries to reassess supply chains and trade alliances. India, of course, stands at a pivotal moment, transitioning from merely participating in the global growth to becoming a pivotal force in shaping the world economic future. The economy grew by about 6.5% FY25, with growth accelerating to 7.8% in Q2 FY26, the highest in 5 quarters. For FY26, the RBI projects GDP growth at 6.5%, maintaining India's position as one of the fastest growing major economies globally. Inflation has moderated significantly, with the CPI falling by 1.5% in September 25, the lowest in the last 99 months. The CPI inflation forecast for FY26 has been revised down to 2.6%, with inflation expected to remain below the RBI targets for most of the year. Key policy initiatives, including GST2 and RBI accommodative stance with the repo rate at 6.4%, underscore the stability-led growth, while India's fiscal position remains solid on a track to meet deficit target. Merchandise exports grew by 6.7% year-on-year in September 25, while service exports surged 14% in Q4 FY25, driven by IT and business services, reinforcing India's strengthening global competitiveness and emergence as a service hub. Indian equity market are positioned for sustained momentum over the medium term. With the recent correction, valuations of large cap stocks and broader market are now closer to their long-term averages, with the earnings growth in the medium term estimated in the range of about 12 to 15%. Strong domestic flows continue to support the markets, making up for outflows from international investors, with the domestic mutual fund ownership share reaching new highs. India's long-term structural themes, including advanced manufacturing, infrastructure investment, rising discretionary spending, and digitalization position the economy well for sustained growth and emerging investment opportunities. Coming to the mutual fund industry update, the quarterly average AUM of the mutual fund industry as of 30 September 2025 stood at 77.13 lakh crore as compared to 63.21 lakh crore as of 30 September 2024, growing by 16% year-on-year. The industry SIP flows for September 25 stood at 29,361 crores, growing by 8% quarter-on-quarter. The total number of mutual fund folios stood at 28.7 crores as of 30 September 2025. The industry saw a total NFO collection. The Q2 FY26 about 30,200 crores, coming from both equity and some debt funds launches, with the equity side primarily driven by sectoral and thematic and multi-allocation funds. Individual average AUM for September 25 grew by 12% year-on-year from 42.11 lakh crore to 47.11 lakh crores, contributing around 60.7% of the total AUM. B30 cities with an average AUM of 14.5 lakh crore accounted for 18.6% of total AUM. Coming to the ABSL AMC performance highlights, at ABSL AMC, I am pleased to announce that we have sustained and crossed the remarkable milestone of 4.25 lakh crore in average AUM. This achievement is a testament to our team dedication and commitment to growth. Our overall average assets under management, including alternate assets, stood at 4.61 lakh crore, growing by 14% year on year. Our mutual fund quarterly average AUM reached 4.25 lakh crore, growing by 11% year on year. The quarterly equity average AUM crossed 2 lakh crore, including alternate assets. Our SIP contribution for September 2025 is about 1100 crores with 39 lakh coming from 39 lakh folios contributing to the SIP accounts. Our SIP AUM contributes around 44% of the total AUM, reflecting the stickiness of our assets. The total number of investors folios for September 25 stood at 1.07 crores, witnessing 5% year-on-year growth. Our consistent investment performance and improvement are driving robust momentum across our focus funds, along with fixed income and arbitrage funds, highlighting the diversification and the strength of our product suite. We continued our engagement with our distribution partners by hosting growth summits across India during the quarter to strengthen our market positions and drive sustained growth. And these strategic events showcase our investment philosophy on thought leadership while empowering our distributors partners and expanding our market footprint. In fact, this engagement at the ground level has enhanced the flows in our focus equity funds that we are promoting as part of the push compared to the last few quarters. Our alternate business represents a cornerstone of our growth story. We have built a high caliber team with deep domain expertise, underscoring our commitment to building future-ready capability. The equity segment of our alternate platform has gained significant momentum.
This is the operator.
Complemented.
Sorry for interrupting. Your voice is breaking. Let me just reconnect you once again. Thank you. The management line has been reconnected. Please go ahead.
Yeah. And thank you and sorry for that, for the trouble. Coming to the alternative business, our alternate business represents a cornerstone of our growth story. We have built a high caliber team with a deep domain expertise, underscoring our commitment to building future-ready capability. The equity segment of our alternate platform has gained significant momentum, complemented by our expanding suite of credit offerings. We continue to refine our PMS and AIF products across equity and fixed income to address the sophisticated requirement of HNIs and family offices. Our results demonstrate the success of this strategic focus. PMS and AIF assets grew significantly from 3,852 crores in Q2 FY25 to 3,250 crores in Q2 FY26, representing an increase of about 8 times. The ESIC mandate accounted for about 20,800 crores of September 2025, while our PMS and AIF AUM, excluding ESIC, has achieved a strong 14% year-on-year growth, reflecting solid organic momentum in our core alternate business. In fact, we are seeing increased participation coming from MFDs to sell our PMS product. I am delighted to announce that we have been selected by the EPFO to manage its debt portfolio over the next 5 years. As disclosed by the Central Board of Trustees during their press conference, we are currently awaiting the formal confirmation letter from EPFO office. And this is a significant milestone that reinforces the trust placed in our capabilities. We successfully completed the first close of ABSL Structured Opportunities Fund 2 during the quarter and preparing to launch ABSL India Equity Innovation Fund. Our real estate business has built significant momentum and gained traction. driven by strong investors' interest and robust pipeline of opportunities. Our real estate book has grown by 23% year on year, and we are on track of doubling our book size by the end of this financial year, backed by the strong performance and track record that we have created of giving back the money to the investors, and the experience that we are creating gives us the confidence the real estate business of us will also continue to see a growth momentum. We are focused on scaling this vertical by deepening our stakeholders' engagement and leveraging strategic partnership to drive execution excellence. And these collective efforts aim to build a resilient, high-quality alternatives platform, positioning us for sustained growth and well-diversified product portfolio across the alternate space. With the new leadership and dedicated teams now in place, we are well equipped to elevate our alternate business, broadening our product suite and deepening our investor engagement. Our offshore average assets stood at 4,795 crores for Q2 FY26. During the quarter, we have witnessed withdrawals from few customers in view of the portfolio restructuring, more in favor of other emerging market economies compared to India. Under the GIFT City platform, we have a fundraising underway for the India ESG Engagement Fund, ABSL FlexiCap Fund, and ABSL Global Blue Chip Fund, which are created for outward remittance as well as for inward remittance into our domestic mutual funds. On the passive front, during the quarter, we have launched ABSL BSE 500 Momentum 50 Index Fund and ABSL BSE 500 Quality 50 Index Fund with the aim to build our passive AUM. As of September 2025, our total passive quarterly average assets reached rupees 36,000 crores, growing by 20% year on year, and the customer base reached 13.5 lakh folios. Our current product suite comprises 53 distinct offerings designed to meet varied investment needs. Coming to financial performance, Q2 FY26 revenue from operation stood at 461 crores, up 9% year on year. Q2 FY26 operating profit stood at 270 crores, up 13% year on year. Profit before tax for Q2 FY26 is at 316 crores, and profit after tax stood at 241 crores. Our H1 FY26 revenue from operation stood at 909 crores, up by 12% year on year, and H1 FY26 operating profit stood at 525 crores, up by 17% year on year. H1 FY26 profit after tax stood at 518 crores, up 18% year on year. And ABSL AMC will remain committed to leading this transformation by building innovative products, robust platforms, and strategic partnership. Backed by a dynamic team, we continue to drive momentum that democratizes wealth creation and empowers investors to achieve their financial goals. With this, I would like to open the floor for any questions. I will be joined by Pradeep Sharma, as our CFO, to take some of the questions as we feel appropriate. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Dipanjan Ghosh with Citi. Please go ahead.
Hi, good evening, sir. So a few questions from my side. First, if we were to see your SIP flow trajectory, despite the improvement that we're seeing in some of your schemes, the SIP market share has been kind of declining. So just two questions on this front. One is, if you can give color on your overall flow trajectory, that will give us some understanding of your redemption and lump sum trends on the equity side of things. And secondly, if I were to dissect this SIP market share decline, let's say over the last 12 to 18 months across channels, which channel has been the biggest drag out there? My next question is on the ESOP expense, if you can quantify the number for first half. And with this ESOP 2025 scheme, assuming it gets approved, what can be the ESOP cost hit over the next, let's say, by 27, 28? And the third question is on the other expense. That has been controlled quite well. So is there any one-off out there, or is this the normal run rate that we should think of? And lastly, a data keeping question, if you can give the SIP AUM for the quarter.
So coming to your first question, SIPs, of course, SIP we have been seeing while we have been adding new registrations, that month on month our new registrations have been rising. That is one area of focus that we have. Of course, given the fact that SIP growth for the whole industry has been quite very, very strong, and also given the fact that we have always been one of the large players in the SIP book, and overall shares looks low, but otherwise we have been maintaining that close to about 1180 crores. And clear focus has been brought in to drive the SIPs across our channel partners. In fact, one of the targets that we have set is for the entire the sales team to increase the focus on SIP numbers by way of increasing the registration. We are seeing month-on-month improvement on that. In fact, the larger contributor to the SIPs is coming from the online platform. Then second is MFDs, third is the NDs, and fourth is the direct and banks, and then direct. Online platform largely on the base of the funds coming as part of the recommendation. In fact, the 1 or 2 quarters before we had reasonably good flows coming from the online platform, and with the improvement of the performance that we are seeing across our equity schemes, our products also coming as part of the recommendation list of some of our partners. In fact, a few of our banking partners are approved our products such as FlexiCap and Frontline Equity, as well as a few of other products which are coming as a focus product. That is reflecting today on our net sales improvement coming on product like Frontline Equity, FlexiCap, GenX Fund, Conglomerate Fund. Even in smaller mid-cap too, we are seeing some kind of flows, which is, I see, is a trend reversal compared to the last 2-3 quarters. Therefore, that focus is there. Even for employees, we have rolled out incentive plan to step up the focus on the SIPs, and therefore the overall numbers should get better. So I'm clearly seeing some turnaround on this. And also given the large size that we have built in the past, definitely the SIPs expertise also comes along the way. That's something we can't help it. At the same time, we continue to focus on building our book. So and then the silver lining would come by way of the performance improvement. Now it's reflecting on 2 and 3 years basis, which ultimately should help us in getting recognition of this improvement of performance coming in the form of numbers as well. That we are already seeing it in the focused equity product. In fact, where we have seen significant redemption in the past due to the variety of reasons, we have seen declining redemptions on all those schemes given the improved performance we are seeing. I think both combinations should go well. On the expenses part, I'll ask Pradeep to answer.
Yeah, so Dipanjan, just to add, you also asked SIP AUM, this is around 82,000 crores. Okay, and
44% of the?
Yeah, which is around 44% of our total equity AUM. As far as expenses are concerned, you asked for other expenses. This is by and large, this depends on the various engagement activities we undertake in the market. So few crores here and there on quarter volatility would be there, but this is in normal. There is nothing one of a case in this quarter.
And then the fourth question is on employees, right?
Yeah. So employee count is around 1,719 people for the quarter.
And sorry, also the question on ESOP expense for the first half and how to think of it for the next 2 years.
So in the current quarter, there are no major ESOP expenses because the last ESOP scheme got over last year. Today in the board meeting, our board has approved the new ESOP scheme, which is subject to the shareholders' approval, maybe in next 3 to 4 months. And then once it is approved, we may have the impact and we will communicate to you.
Yeah, that will come back, Dipanjan, on that. Yeah, once it is approved. Yeah.
Got it. Thank you and all the best.
Thank you.
Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Harshit Toshniwal from Premji Invest. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, Harshit.
Hi. Thank you, sir. Happy Diwali. Sir, I had 2 questions. One is on the SIP piece itself. So I got some part of your explanation, but if I look at the SIP just in terms of the market share, then we see a sharp dip versus last quarter. I think it has moved from 4.1, 4.2% to 3.6, 3.7%. Now, probably the redemptions might be lower, but do you think that is it in the newer SIPs getting created, our market share is negligible compared to the 3.5% we have on the overall flow? Is that what can be done to address that? Because despite the performance has started to improve, but that reflection in the SIP number is not there. And the second one was on the yield, sir. On a like-to-like basis, if I look at the equity yields, then probably I think we would assume that around, at least back calculation suggests around 2 to 3 basis points yield decline. If you can help us know that, is there anything particular which has changed in the distributor commission or the slabs which has led to that number? So these two questions, sir.
Yeah. So, Arjun, as far as the SIP is concerned, we did have some maturities of SIPs which came in the form STP form, largely on account of that. Otherwise, the SIPs coming from retail continues to show a strength. And again, SIP new registration, something which we keep track, wherever incremental market share coming from SIP registration also have been on the rise. But sometimes when we get SIPs by way of an STP, which largely come into fixed income, and then they do an equity STP, we have seen something is getting expired. But this thing, in any way, is quite common, and that's something doesn't make me worry. At the same time, the renewed focus that we are bringing in terms of driving the numbers on the basis of improved performance on one side, with the product getting approved from the channel partners, of leading channel partners in the banking side. So all of them should only help in terms of improving it. But overall, cross volume market share has been improving. But ultimately, this will lead to actually improvement on the overall numbers. In fact, we even have focus on existing SIPs investors, how we can increase the ticket size from the existing SIP investors by way of drive to the existing SIP investors, increase the number of products per customer from 1.42 to about 1.56. That's something we are actually doing a drive. All such initiatives should only help in improve the numbers. In fact, even from the industry point of view, while the numbers I keep tracking it, I think some of the accounting which I think comes at different channel partners, even daily SIPs have grown, they also get counted, and different type of SIPs is being driven by different set of people, also being counted. As long as we are present in those segments, for example, daily SIP, we are not fully present, given the cost of acquisition of customers on this pie is high. At the same time, ticket sizes are low. And those are some of the things which, of course, keep evaluating on a time-to-time basis. And then we'll, of course, push it as and when there is as we see merit for pushing our SIP growth.
Sir,
and as far as your margin concerned...
Sir, if I can just ask one thing on this. So, if I understand correctly, you are saying that on a gross basis, our share is improving, but there are certain redemptions which have been keeping the net share low. So, if I can also, are these redemptions from, say, more than 5-year holding category, or are these redemptions from any particular channel? I'm just trying to see that, do you see a sunset period by which probably that higher redemption class of
largely is coming from digital platform, Arshit. I think in digital platform where we also had significant volume pickup, and there also expertise are generally is there. But this is a function of every market. They have to switch from one to other, because digital platform is the one generally is low. Otherwise, MFDs and the traditional banking channels is high. But some of the partners with whom we enjoyed high market share in the past, and they all have signed up for a good number of years. And that's something which also we see as the SIP is getting expired. More than cancellation, it get expired, we have to win them back. So we have a separate strategy called SIP win back through the proactive communications, and also predicting that which are the customers are potential of redeeming. And this exercise that is being carried out all should at limit add to the overall improvement on the numbers.
Sir, if I may ask, I think 2 quarters back, we got a significant bump up in SIP because of the digital platform.
Yes.
So will it be right to say that what we got at, say, half year back, that is only creating redemption? And in that case, if you can also give some color on the mix which is coming through these online channels. Say if I take Grow, Zerodha, Angel, these 3-4 large online channels, direct online channels, how much of our SIP would be incrementally coming from these channels?
See, roughly about 34% of the new SIP subscription coming from digital channel.
On
And
volume terms,
while
this 34 would be on volume term. If I look at the value, then would it be
it's
that
on the
large?
SIP amount. In the SIP amount.
Okay. 35%
Right.
of incremental is from these online platforms.
In the online platform. Sometimes, of course, as I mentioned, these channels are very dynamic. I think within the online platform, there are platforms which are more ARM based platform where we are seeing an improvement on the numbers. I think it's quite mixed. We can't generalize it. I think online platform everything is getting cancelled or give the volume. Some give volume, somebody else of course increase the market share. This is the moving numbers, Harjit.
Got it. And any online marketing or online promotion of our performance, does that help in retention? Because I'm trying to understand that, sir, if on the gross basis, we have been continuously improving, and if I look at our performance also, that has picked up a lot in the last 2-3 quarters. But just wanting to see that probably a place where we can maintain that 4% SIP flow share and grow from there on a net basis is where I am thinking that is there a timeline which we should look to, or it's very difficult to predict that way.
No. One thing is it remains a high focus area, Harjit. I think that something is there. And whatever we have to do on an ongoing basis, either through engagement, through the communications, or highlighting our product improvement on performance and making it part of the recommendation list. So that is a continuous exercise. And wherever, of course, we have to spend money in terms of promotion. For example, we are already rolling out a drive called SAP Subsidy Important Plan drive that we do last quarter. And this quarter too, we have already planned some more initiatives to drive the SAP across India. This will remain as an ongoing regular exercise rather than that we have to do one time. From a sales team point of view, of course, while they have been improving our overall productivity, which is what I mentioned about gross sales market share has been showing an improvement. At the same time, improving the overall SAP subscription in terms of adding new customer base will remain one of the key. That something is also being driven by way of encouraging through the incentive plan to the sales team. So this is going to be ongoing exercise, Harjit. Coming to your question on the margin yields.
So Harshit, yields for equity are in the range of 64-65 basis point. Yes, there is a drop around 1 to 2 basis point. That is because of from earlier quarters, because of the telescoping prices mainly. Because our equity AUM has grown from around 1,80,000 crores to around 1,92,000 crores. So I think going forward should remain in the same range around 64-65 basis point in equity.
Yeah. And then marginal drop is on account of the offshore AUM dip that has led to about 0.4 basis points kind of drop.
Got it. And one last thing, sir, on the EPFO debt money which we plan to manage. Do you think that will this be a profitable thing altogether, or this will be a marginally loss-making business?
I would say cost neutral. I will not say loss-making or rather profit-making. It's a cost neutral because we have a team dedicated for managing a large pool of money across different segments. The team strength will be leveraged to manage this money. But I think we need to also look at it. This is a prestigious mandate and improve the overall credentials of our existence of 30 years in managing money. So ultimately, this will have a rub-off effect as we move forward.
Perfect. Got it, sir. Thanks a lot, sir. All the best.
Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Mohit Mangal with Centrum. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the employee expenses. So if I look, employee expenses grew 6% YOY in Q2. And if I look in Q1, the YOY growth rate was around 4%. And you said that, the ESOP won't, ideally come, say, this year. So do you think it will remain in, single digits at around 6-7%, or it will grow in higher double digits for the entire year?
Yeah, so Mohit, in this quarter we had some reversals of around 6 crores on our variable pay provision of last year after we disbursed all the amounts based on the employees' performance. So if you see on normalized basis, it should be higher by around 12% instead of 6%.
Understood. So for the entire year, basically 10 to 12% is something that we can expect, right?
Yes.
Yeah. Right. My next question is in terms of new pipeline of schemes, that can be expected in H2.
Yeah, we have one product approval and already in place for us, and that's something we've been debating when to launch it. Given the fact that too many holidays are there, we want to, of course, plan it carefully that we have a good number of working days for us to have the NFO. Second, within the mutual fund space, and second, we also planned one launch of new product under the alternate AIF side, which is in the PMS side. Plus on the GIFT City, also we have a product which is currently running for investing overseas market. And then the last piece, of course, we are preparing ourselves for SIF launch. We already got the approval from SEBI for the brand, which is called Apex. We already filed 2 products with SEBI for launching it, which is an Arbitrage Plus kind of product. That's something we'll start with that to begin with. We'll start with Arbitrage Plus kind of product. And then as we finish the first launch, we'll go for long short once we have a talent in place, which we are currently in the process of getting on board. Once it is done, then we'll go for a long short fund product also.
Understood. So basically we have a team in place for this SIF, and will basically be there in financially 26. We could see some impact of that in P&L, right?
Yeah. Only the team we don't have in the long short. Though we have a team, but they may not be in a position to manage the long short fund using the derivatives big time, only to generate alpha over the index. That's something we thought we'll have one dedicated person to drive that. That something should be in place maybe within about 1 to 1.5 months' time. Otherwise, the rest of the product, like hybrid kind of product, we already have internal capability.
Understood. And so my last question is towards PMS and this AUM. So that we have seen a lot of growth, although sequentially there was some degrowth. But in terms of yield, do we make around 0.6% on average AUM on this?
Yeah, I think it's even higher if I'm not wrong.
Actually, our average is around 0.8%.
0.8, yeah.
Mohit.
Okay.
We get roughly about 80 basis points we get, Mohit. In fact, last 2-3 quarters, we are seeing the contribution coming from PMS to the overall revenue. We are seeing an upward trend.
Okay.
In fact, I must also mention, in addition to in addition to equity PMS and AIF, we are also seeing the credit opportunities fund and real estate credit fund. Both are not only stabilized, also now done the first closure. And investments also have been more or less done. With this, that revenue from contribution coming from these two segments also will keep improving.
Understood. So out of this 461 odd crores, how much would be the PMS and AIF this thing?
So this would be Mohit around 31 to 32 crores.
31 to 30 crores. Okay. Thanks, and wish you all the best.
Thank you. A reminder to all the participants, please restrict yourself to 3 questions. Also, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Amit Singh with Innesmith Insight Private Limited. Please go ahead.
Hello. Am I audible?
Yes, Amiji. Yeah, you're audible, yeah.
Congratulations, sir, and thank you for giving the opportunity. My question is on the growth of arbitrage fund. Last quarter, you mentioned that it was behind the industry. So how this segment performed in this quarter, and what are the changes in your strategy to improve this performance?
Sure. So, of course, this is one of the funds where we felt that we can grow a little faster than the industry. In fact, we had reasonably good AUM growth, going about 20% rate of growth compared to the industry. In order to improve the performance, of course, we have done a good mix of generating little higher return by increasing the focus on one on the fixed income space between the selection of securities in the fixed income space for the respective maturities, adding about 7-8 basis points total return, and also the efficiency that we have brought in terms of the identifying opportunities wherever it's available to improve the overall return. That's why I think the performance arbitrage fund also has been supporting the overall growth momentum.
Okay. And
Yeah.
so the second question is, as you mentioned in the last quarter, the mid-cap and small-cap segment does not have the large presence. So what other progress has been made since then, and what other strategies are being implemented to improve the market share in this segment?
Yeah. So in fact, we have seen reasonably good performance with respect to the mid-cap fund, and a smaller mid-cap also is now part of the overall performance improvement strategy that we have. We recruited a gentleman almost about a year back, and we gave him some time to settle down and start focusing on building the performance these two schemes, so that and also the multi-cap fund, so that we'll be able to actually get our due market share in this space. We're already seeing the silver lining coming in the form of improvement in performance. In fact, our flows, even both in mid-cap and small cap, is positive, though it's not to the extent of what the industry is getting. But definitely this will probably help in terms of as we move forward to get our due market share in this space.
Okay. Thank you, sir.
Yeah. Thank you.
That's all from my side.
Yeah, thanks.
Thank you. Next question comes from the line of Divij Punjabi with Banyan Tree Advisors. Please go ahead.
Yeah, my question was around the offshore AUM. So that has declined sequentially. So can you just maybe share the yield on that and also the reason for the decline?
Yeah, offshore. The offshore, largely, of course, we have been managing a few mandates from some of the large funds that invest in India. As you know that India exposure by most of the FIIs have been on the reduction side, and having managed the money for almost 14-15 years, very successfully generating more than 2% alpha over MSA index. But due to the allocation change that we had, that has moved out. But however, impact of that it's about 0.2%, which is roughly about 0.4 basis point roughly is the impact on the contribution coming from the offshore assets. Nothing significant, but definitely because of the reduction that the FIIs generally have been having on India exposure, and our money also had moved out. I'm sure, given our strong track record that we have given them over 14-15 years, and some of them may even come back as they gain confidence in India coming back.
Sure. I just have one more question around the debt fund. So can you just talk about what is driving the growth in the debt segment? Year on year and quarter on quarter, we're seeing decent growth. So which are the segments over there? And longer term, also, what is the strategy around active versus passive funds? Yeah.
So as far as the debt fund concerns, largely the fixed income team have been having a very bullish view on interest rates, especially calling the RBI move on cutting the interest rates. In fact, all the moves of RBI, our team has been predicting it quite well ahead of time and positioning the portfolio to benefit investors by running a duration portfolio. That's something helped us in building fixed income side. And second, within the fixed income, hybrid funds, which is the equity fixed income fund, which is a new category. Also, we could add assets given the tax benefit that accrues to investors. At the same time, the way we conservatively manage between equity and the fixed income, and both of them are helped. And that's where I think money has come. Large segment of the people have come from both HNIs and corporate treasuries as well as MSMEs. And which is your second question?
Active.
Yeah, active versus passive. Of course, the passive is something we have seen some kind of good momentum by way of launching new product. In fact, we launched 2-3 funds last year, like defense fund we launched and has done exceedingly well. We have seen flows coming in the segment. We have positioned some of our product launches in the passive side, which are more like unique, something you can consider as a fund that can help in investors to diversify by choosing funds like Quality, 50 Fund, and Momentum Index Fund. That's something we continue to drive in our product innovations and structuring product. And third, we also seen flows coming in our Silver Fund and Gold Fund. In fact, our Silver Fund caused a size of about 2,000 crores. And the last 2 weeks, when the market turned volatile, even we had to also close the fund for subscription for some days. Of course, we are now coming back in terms of opening the fund for subscription. One good thing is, given the fact that we have the product in place, when the time was favorable for getting flows in this fund, we could get some good flows both in Silver and Gold Fund as well. So there is an ongoing exercise, rather ongoing push that we are giving in terms of our passive funds. Active continues to remain focus area, no doubt, both in building SIPs as well as growing our size. At the same time, passive is also will remain as one of the asset allocation fund for investors' point of view that continue to be driven a separate team of people to keep a focus. And lastly, we're also trying out some of these broking firms so that our product will become as part of their daily trading that they can do on ETF while creating some kind of buying behavior in the exchange platform. These are some of the initiatives we are taking, and hopefully it should help in terms of increasing the number of customers. In fact, as I speak, we have about 13.5 lakh customers in ETF platform. I think that will continue to remain a focus area for building the asset class.
Sure. Thank you.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining the call. And with this, we conclude our Q2 FY26 earnings call. Thank you.
Thank you. On behalf of Aditya Birla Sun Life AMC Ltd, we would like to formally conclude this Q2 and H1 FY26 earnings conference call. We sincerely appreciate your participation in this event, and we kindly request that you now disconnect your lines. Thank you for your time and engagement.